assume that on October 1st we received $5,000 for services that expected to be completed on the 28th of February. So the journal entry here should be a debit for cash and a credit for unearned revenue. So the unearned revenue, this is a liability account. Okay, so why we record it as a liability? Simply here we cannot record revenue because we did not perform services. We received the amount in advance, so we did not provide services yet. So we have an obligation now to provide services in the future by this amount, which is 5,000. So now, as you can see, after we received the 5,000, we promised to provide service for 5 months. October, November, December, and January and February from next year. So this is a total of 5 months. By the end of the year, we have to prepare the following journal, the following adjusting entry. So we have 3 months. We provide services for 3 months out of the 5 months. So which means that we provided services for 3,000 out of the 2,000. So here, so I will debit unearned revenue and I will credit service revenue. So this one will be debited by 3,000 and this one will be credited by 3,000 as well. So because we provided service for 3 months, so now we can record a revenue for 3,000 out of the 5,000, but the liability that we had before, which is for 5,000, will decrease by 3,000 because we already performed 3 out of the 5 months that we were obligated to do. Now the second type of adjusting entries called accruals. So and it's divided into accrued revenues and accrued expenses. Let's check the accrued revenues. Accrued revenues is simply it happens whenever we provide services to the customers, but we did not record the revenue related to these services yet. So by the end of the period, we have to make sure that for any services that we provided during the period or any revenues recognized during the period should be recorded by the end of the period. For example, here it's saying that on December 31, on December 13, Pioneer Advertisement Agency earned 2,000 for advertising services that have not been recorded yet. So we provided services for 2,000, but we did not recording it yet. So we have to recognize this revenue during the period because we provided the services during this accounting period. So we will credit service revenue by 2,000, but because we did not receive cash for this service revenue, so we will debit accounts receivable, and this amount will be collected in the next accounting period. Accrued expenses is very similar, but so this is about expenses incurred but not yet recorded or paid yet. A very famous example about this is accrued interest. So assume that we signed 6-month note payable in the amount of 6,000 on October 1st at 10% annually. So now we signed this note on October 1st, and this note has a 6-month long. So from October 1st until December 31, which is the date that we use for adjusting interest, we will have as you can see, we will have 3 months. So the accounting period will have interest for 3 months. How to calculate the interest? Simply we multiply the face value of the note, which is 6,000, and this is the debt that we have. So the annual interest means for 1 year. That's why we have to write it the time as a fraction of a full year. So we have an interest for 3 months out of the 12 months. So we multiply 6,000 times 10% times 3 divided by 12. So the answer, which is 150, this is an interest for 3 months only. So by the end of the year, we will record interest expense by 150, and we will record interest payable credit for 150. We record interest payable because simply we did not pay this interest. We will pay it in March. So that's why we record interest payable, because we will pay this interest later in the next accounting period. Accrued salaries are another example of accrued expenses. Assume we have a simple question saying that we have accrued salaries. For example, employees during worked during December a specific number of days that we did not pay for them these salaries for these days. Okay, so assume it was 1,500. So in this case, we will debit salaries expense and credit salaries payable. So debit 1,500 and credit 1,500 for salaries payable. And all these are all the adjusting entries that we have in these examples. Now, this is how questions on this topic will come in the exam. So usually you will be given a trial balance that shows the account's balances, as you can see here, and then you will be given an additional data. On each one of these, I will require you to prepare the adjusting entry. So this is the journal entry that you have to do to adjust the accounts for revenues and expenses. So for each one of these, sometimes to do the adjusting entry, you have to go and check the balances on the trial balance by the end of the accounting period. So here we assuming that on June 30 we are this is the end of the accounting period. So we want to solve number 1, prepare the adjusting entries for the month of June. Let's check the first item here. It's saying that supplies on hand at June 30 are 1,300. So if you go and check supplies that is recorded before, it was 2000. So we purchased supplies for 2000, but now the amount that we have at the store is only 1300, which means that we used 700 of supplies. So simply I have to do here, I will have to debit supplies expense and credit supplies by 700, and for this one it will be credited by 700. Simply, how did we get the 700? Is simply we purchased supplies of 2000, and now the remaining, the supplies on hand, means like the unused supplies is only 1300. So if we say 2000 minus 1300, this will give us a 700 of, yeah. So this is the journal entry related for supplies. Now let's check the second one. Utility bill for 150 has not been recorded and will not be paid until next month. Simply, this is an accrued expense. We said any expense not recorded yet, this is an accrued expense. We should record it because we want the accounting period, which is the month of June, to take its share of expenses and revenues. So this is 150. I will debit utilities expense, and I will credit utilities payable, because we did not pay it, so it will be paid next month. So I will record utilities payable for the amount of 150. Great. Let's check the third one. The third one saying that insurance policy is for 1 year. So we have an insurance policy for 1 year, and the policy is 2,400. So we are using 1 month, and the insurance policy is 2,400, which means per month it will be 12. It will be 12. It will be, sorry, yes, it's 1 year, which is 12 months. So the insurance expense per month, or we will use out of this prepaid insurance per month 200. This is simply 2,400 divided by 12. So I will debit insurance expense, and I will credit prepaid insurance by, simply I will say that 2,400, and I will divide this by 12, so to get the monthly insurance. So this will be 200. Yeah, so debit this one by 200 and credit the prepaid insurance by 200.